What's the best investment for your beer fund in retirement? Is it gold or stocks? Hello and welcome to today's Daily Blitz. In today's video, we'll be discussing what are the best strategies for hoarding as much money to pay for beer in retirement.
And there's a particular reason we've chosen beer, and it's the chart on your screen now.
Yeah, we're not just alcoholics here. This does actually have some backing up to it.
But your friend Ronnie Stoffler must be an avid beer drinker because every year his firm Incrementum puts out some research which shows how much gold it would take to buy a mass of beer. Now, a mass of beer is 1 litre, and that's the size in which Germans drink their beer. As you can see from the chart, the price of beer measured in terms of gold has actually fallen over the years, even though in terms of euros, it's risen massively because of inflation.
So what do you attribute that to, do you think?
The simplest answer is that basically gold has a fixed supply or a limited supply, whereas money has no limited supply. It can be printed as much as central bankers want to print, and of course in recent years they have been printing a huge amount that devalues the currency. They can't print gold.
But it's not just beer, is it?
No, it's not. It's also in terms of stock market returns. So most people would consider a lump of metal, an inanimate object, gold, to not perform very well over time as an investment. But it actually has outperformed the stock market, which is why we started our video by arguing actually gold might be the best way to fund your beer habits or your beer consumption habit.
Once you reach retirement.
Once you reach retirement, yes. So as you can see from the chart on your screen now, gold has outperformed the FTSE 100 even after you include dividends since the year 2000. And that's not some sort of cherry picking of data. It's not an exception. Regardless of how many years you go back and which time period you choose, there's a good chance that gold outperforms stocks. The only major exception being since the bottom of 2008 and 2009. Obviously, if you buy at the bottom of a bear market in perfect timing, then you do outperform in terms of stocks.
So what do you attribute all of this to? Do you think this is all a product of central banking and a product of money printing in general? Because generally you would think that when you have a growing economy, the economy has grown to some degree, so businesses that are a part of that and are paying dividends and expanding, generally if you're owning shares, I mean, you should really be outperforming an inanimate lump of metal, right?
Yes, but what really matters is in terms of what sort of money you think. So gold used to be money. The word cash used to refer to gold. But that link between gold and money was broken in 1971 when Nixon went off the gold standard. And if you compare returns since then, gold has actually outperformed stocks and bonds. So that's a huge time period during which what used to be just considered money has grown in value more than stocks and bonds. So really what's going on is the value of money is declining so fast, it's offsetting the returns you're getting in stocks and bonds, and people who are investing in stocks and bonds aren't really getting anywhere fast, if at all, because really, in the end, gold is money, and in terms of gold, those asset prices have fallen.
So unless the company that you're investing in pays dividends in gold, if you want to invest for retirement and specifically for the consumption of beer in retirement, you should stick with the inanimate yellow object that is always called simply a pet rock. That sums up everything for today. Thank you very much for watching today's Daily Blitz, and be sure to tune in next time.